Mrs. Mamoni. Thank you so much for being Amar Baba.
Hi everyone, welcome to my channel. In this video, I am going to start the chapter Bank Reconciliation Statement. I am going to discuss what is Bank Reconciliation Statement, what is Cashbook, what is Passbook, and most importantly, when we deposit money into bank, why does bank passbook says your account has been credited instead of debited? So let's get started. Chalo, shuru kora jak. Now what is Bank Reconciliation Statement or BRS? Bank Reconciliation Statement is an analytical statement that explains the difference between the balances of the passbook and the cash book. Most of the time, the balance of the passbook and the balance of the cash book do not match, and which is why bank reconciliation statement is prepared. Okay? And before proceeding any further, we need some fundamental knowledge of two items, cash book and passbook, in order to know or understand what is bank reconciliation statement or BRS in depth. But most importantly, when we deposit money into bank, why does passbook says your account has been credited instead of debited? So if you are new to the study of debits and credits in the accounting, this may seem puzzling and confusing, and this may seem contradictory as well. You must be wondering, whatever we have learned in the chapter journal, is it all wrong? But let me tell you, bank's treatment of debits and credit is indeed consistent with the basic accounting principles and procedures that we have learned. Okay, so let's look at the transaction and consider the related journal entry from both Mr. Kapoor's perspective and the bank's perspective. Let us see from Mr. Kapoor's perspective first. So on 1st April 2022, cash deposited into bank 10,000 by Mr. Kapoor. So what will be the journal entry in the books of Mr. Kapoor? From Mr. Kapoor's perspective, see. Take a look. In the books of Mr. Kapoor, from Mr. Kapoor's perspective or from Mr. Kapoor's point of view, bank account debit to cash account, being cash deposited into bank. Okay? Please remember the journal entry is recorded in the books of Mr. Kapoor from his perspective or from his point of view. So the journal entry is bank account debit to cash account. Now tell me why bank account is debit. Now let's understand logically. For that you need to have clear conception of the chapter journal. According to the 3 golden rules of accounting, or according to the traditional method, bank account comes under personal account. According to personal account, the receiver of the benefit is debit. Here, when cash is deposited into bank by Mr. Kapoor, bank is the receiver of cash. So bank account will be debited by rupees 10,000. Now why cash account is credit? According to the 3 golden rules of accounting or according to the traditional method, cash account comes under real account. According to real account, what goes out is credit. Here when cash is deposited into bank, cash goes out from the business. So cash account will be credited by rupees 10,000. Understood? Now let's see from the modern method. Why bank account is debit? Here, when cash is deposited into bank, it is an increase in an asset because bank balance is increased. So bank account will be debited by 10,000 because according to the modern method, an increase in an asset is debit. Okay? So bank account will be debited by 10,000. Now why cash account is credit? Here when cash is deposited into bank, it is a decrease in an asset because cash balance is reduced. So cash account will be credited by 10,000. Because according to the modern method, a decrease in an asset is credit. Okay. So cash account will be credited by 10,000. Now let us understand why Mr. Kapoor records rupees 10,000 on the debit side in the bank column of the cash book. This is a double column cash book. The journal entry is bank account debit to cash account. So Mr. Kapoor records to cash account in the bank column 10,000. Since this is a contra, Mr. Kapoor also records by bank account 10,000 in the cash column. C. But we'll mainly focus on the bank column. Why? Because here we are dealing only with the bank column in bank reconciliation statement. Okay. Now what is cash book? I have already discussed in my videos single column cash book, double column cash book and triple column cash book. For those who don't know what a cash book is, let me tell you once again. Cash book is a book in which cash receipts are recorded in the cash column on the debit side and cash payments are recorded in the cash column on the credit side of the cash book. Okay. All checks received are recorded in the bank column on the debit side and all checks paid are recorded in the bank column on the credit side. But please remember, as we all know, there are two columns in a double column cash book. One is cash column and the other a bank column. But please remember, here we are dealing only with the bank column because in bank reconciliation statement, it only covers those transactions which relate to the bank only. Okay. So when money is deposited into bank by an account holder, Mr. Kapoor, his assets, that is cash at bank, is increased. Hence, Mr. Kapoor has recorded the amount 10,000 on the debit side in the bank column side of the cash book and debits bank account. Okay. Please remember, Mr. Kapoor has recorded the journal entry as well as the cash book from his perspective, from his point of view. Okay. From Mr. Kapoor's perspective, when cash is deposited into bank, Mr. Kapoor has debited bank account and credited cash account and 10,000 he has recorded in the bank column on the debit side of the cash book. Okay. Now let's see from the bank's perspective and from bank's point of view, what will be the journal entry of the bank. So on 1st April 2022, cash deposited into bank 10,000 by Mr. Kapoor in the books of bank. So what will be the journal entry? So the journal entry will be in the books of bank from the bank's perspective or from the bank's point of view. So what is the journal entry? Cash account debit to Mr. Kapoor account 10,000. So bank has credited Mr. Kapoor account and debited cash account. Whereas Mr. Kapoor has debited bank account, but bank has credited Mr. Kapoor account. Now, so bank maintains account as per their perspective and not from the point of view of the customers or clients or account holders, in this case Mr. Kapoor. So bank prepares journal entry from their point of view. Okay. So the journal entry in the books of bank from bank's perspective is cash account debit 10,000 to Mr. Kapoor account. So why cash account is debit? According to the 3 golden rules of accounting or according to the traditional method, cash account comes under real account. According to real account, what comes in is debit. Here when cash is deposited into bank, cash comes in. So cash account will be debited by rupees 10,000. Okay. Why Mr. Kapoor account credit? According to the 3 golden rules of accounting or according to the traditional method, Mr. Kapoor account comes under personal account. According to personal account, the giver of the benefit is credit. Here when cash is deposited into bank, Mr. Kapoor is the giver of the cash. So Mr. Kapoor will be credited by 10,000. Okay? Understood? Please don't forget, this journal entry has been recorded from the bank's perspective and not from Mr. Kapoor's perspective. Okay? Now let us see why cash account is debit according to the modern method. Cash account is debit because when cash is deposited into bank, there is an increase in an asset. So cash account will be debited by 10,000. Okay? Because according to modern method, an increase in an asset is debit. Okay? So why Mr. Kapoor account is credit? According to modern method, Mr. Kapoor is a customer or client or a creditor of the bank. So why Mr. Kapoor account is credit? According to bank, Mr. Kapoor is a customer or an account holder or a creditor from the bank's perspective or from the bank's point of view. When cash is deposited into bank by Mr. Kapoor, it is the liability of the bank. Therefore, the amount 10,000 deposited in Mr. Kapoor's account increases the bank's liability. Please remember, Mr. Kapoor is the creditor from bank's perspective or from bank's point of view. Hence, Mr. Kapoor account has been credited by rupees 10,000 because when cash is deposited into bank by Mr. Kapoor, please remember this is not bank's money. This is Mr. Kapoor's money. Bank owes it back to him. So, in bank's book, it is a liability. This is an increase in a liability. So, bank's liability is increased. So, according to modern method, an increase in a liability is always credit. So, Mr. Kapoor account is credited by bank. Please remember, an increase in a liability is always a credit according to modern method. Bank credits Mr. Kapoor account. Do you remember Mr. Kapoor has debited bank account, but bank has credited Mr. Kapoor account. So this is a liability for bank. So bank will credit the customer checking account. In this case, Mr. Kapoor account will be credited to reflect the bank's obligation. Please remember, when cash is deposited into bank by the customer, bank will always credit the customer checking account, in this case Mr. Kapoor account, because to reflect the bank's obligation or liability to return rupees 10,000 to Mr. Kapoor on demand, because 10,000 is not bank's money. This is the customer's money or Mr. Kapoor's money. So bank has to return 10,000 to Mr. Kapoor on demand. So bank credits Mr. Kapoor account by rupees 10,000 since Mr. Kapoor is a creditor from bank's perspective. Okay. Now let's see the passbook. What is passbook? Passbook is called passbook as it passes between the bank and customer or client or account holder whenever transactions are taking place. It is a conclusive evidence of banking transactions. At the time of opening an account with the bank, bank gives a small book to the customers or clients or account holders, which is known as passbook. Okay? All the entries in the passbook are recorded by the bank staff only. A passbook is a copy of the account of a customer in the ledger of the banks. The customer is allowed to keep this book with him or her, but he or she is not allowed to write anything in the passbook. Okay? Only the bank staff has the right to record the banking transactions in the passbook. Okay? It is the exact copy of the customer's account in the bank's book. It is recorded from the bank's perspective and not from the customer's perspective. Please remember, when the amount is recorded in the passbook, it is recorded from the bank's perspective or from the bank's point of view and not from the customer's point of view. Okay? Here, cash and checks deposits are recorded in the deposits column, which is credit, and when cash and checks are withdrawn, it is recorded in the withdrawal column, which is known as debit. Okay, see the format of the passbook. The first column is for date, the second column is for particulars, the third column is for check number, and the fourth column is for withdrawal, that is debit, and the fifth column is for deposits, that is credit, and the last column is for balance, total balance. From the bank's point of view, when cash is deposited into bank by Mr. Kapoor, the journal entry is cash account debit to Mr. Kapoor account. Since bank has credited Mr. Kapoor, so 10,000 bank has recorded in the credit column. Deposits is known as credit column because Mr. Kapoor is a creditor from the point of view of bank. Bank's liability has increased because this is bank's obligation or liability to return 10,000 to Mr. Kapoor on demand. So bank has recorded 10,000 in the credit column and not in the debit column. Whereas, let me show you, Mr. Kapoor has recorded 10,000 in the bank column, that is on the debit side, because Mr. Kapoor has debited bank account. From Mr. Kapoor's perspective, Mr. Kapoor has debited bank account and recorded 10,000 in the bank column on the debit side. Whereas bank has credited Mr. Kapoor account and recorded 10,000 in the credit column. From the bank's point of view or from the bank's perspective, Mr. Kapoor is a creditor or customer. Bank has the liability or obligation to return 10,000 to Mr. Kapoor on demand. That is the reason bank has recorded 10,000 in the credit column, not in the debit column. Please remember, Mr. Kapoor is a customer or creditor of the bank. The money 10,000 deposited into bank by Mr. Kapoor is the amount the bank owes it back to Mr. Kapoor. Bank credits Mr. Kapoor account to reflect the bank's obligation or liability to return rupees 10,000 to Mr. Kapoor on demand, because this is not bank's money. This is the customer or account holder or creditor Mr. Kapoor's money, and bank always considers their customers as creditors. Please remember, the cash amounting 10,000 that Mr. Kapoor has deposited into bank is a receivable asset for Mr. Kapoor from his perspective, and it is a liability for the bank from bank's perspective. Understood? The bank's payable account is increased, and according to modern method, an increase in liability is credited. That is the reason Mr. Kapoor account is credited by bank. This is a liability from bank's perspective or from bank's point of view, because bank has to return the money to Mr. Kapoor. So there is an increase in a liability. So bank will credit Mr. Kapoor account because this is a liability according to modern method or according to the golden rules of accounting. Okay. So bank credits Mr. Kapoor account from his perspective, and that is the reason he writes 10,000 in the passbook in the credit column. But Mr. Kapoor, on the other hand, debits bank account and records 10,000 in the bank column on the debit side from his perspective. Please remember, because from Mr. Kapoor's perspective or from Mr. Kapoor's point of view, when cash is deposited into bank, this is a receivable asset or there is an increase in asset. That is the reason Mr. Kapoor has debited bank account and has recorded 10,000 in the bank column on the debit side in the cash book. But from the bank's perspective or from bank's point of view, Mr. Kapoor is a customer or creditor because bank has the obligation or liability to return back rupees 10,000 to Mr. Kapoor on demand. So that is the reason bank has credited Mr. Kapoor account by rupees 10,000 and has recorded in the passbook in the credit column 10,000. Okay? I hope you understood. Please understand the nature of engagement and transaction between a bank and customer is that of receivable and payable relationship. So that is the reason when we deposit money into bank passbook always says your account has been credited instead of debited. Understood? I hope you understood and there is no confusion now. I hope this is clear. And please remember this is important because when we'll do BRS problem or bank reconciliation problem, you will see or notice because of the perspective of the customer, debit balance as per Cashbook indicates that businessman has so much balance of deposit at the bank, which is also known as favorable balance. And because of the perspective of the bank, credit balance as per passbook indicates that the businessman has so much balance of deposit at the bank, which is also known as favorable balance. Okay? This is important. This conception is needed. Concept clarity is very much required because when we'll do bank reconciliation statement problem or BRS problem, so we'll do BRS problem very soon. I hope you understood. Thank you so much for watching. Thank you so much for your precious time. I sincerely hope this was helpful. And before I fade out, please remember, the sky is free for all of us. So why not dream of flying high? I know it's not easy to fly high, but you can always give it a try. After all, you cannot fly unless you learn to fall and get up to try again. So find your wings that will help you fly high, soaring through the clouds and make all your dreams come true. Bye-bye. Take care, stay safe and stay blessed always.